Hey, welcome, guys. It is Tuesday, July 1st, in preparation for Wednesday, July 2nd for the trading day. We're going to jump back into the book Market Wizards, Trade Interviews with Top Traders by Jack Swagger. He's in the middle of interviewing Marty Schwartz. We'll kind of finish up, I think we're going to finish up his chapter here before we jump into tonight's homework, or at least the, kind of overview here. Let's see. One of the last things. Okay. One of the things that Schwartz says, one of the most suicidal things you can do in trading is to keep adding to a losing position. Um, he said, you look at your long position very well on October 19th. Did you think about actually going short? He said, I thought about it, but I said to myself, now is not the time to worry about making money. It is the time to worry about keeping what you have made. Whenever there's a really rough period, I try to play defense. I believe in protecting what you have. Um, he said, when did you start trading again? He said Wednesday of that week. It's funny because I started out trading only about one or two S&P contracts at the time. The S&P was trading a full point increments, and then Schweiger has the side note here, equivalent to $500 per contract. This is the regular S&P, not the ES minis, or by no means the ES micros. So, like I said, the regular S&Ps they've now done away with those, but they used to trade at $500 a point. And he said, my attitude is never to risk your family's security. I did not need to make any more money at that point. So he talks about protecting what he had there. Skip over a couple sections here. What stands out as your most dramatic trading experience? Swagger asks. Uh, Marty Schwartz says, the most gut-wrenching time was November of 1982. I had a much smaller net worth then, and I took a $600,000 loss in one day. What happened? It was election day, and the Republicans did much better than expected in the congressional race. The market ran up 43 points, which at the time was the largest point advance in history. I was short, and like an imbecile, I sold more with the S&P locked at the 500 point limit against me, and less than an hour left in the trading session. My wife, who was working with me at the time, was out that day, but the next day she came into work, and every 10 minutes she would say, just get smaller, get smaller. I kept taking losses, just getting out of the position. Um, Whenever you get hit, you are very upset emotionally. Most traders try to make it back immediately. They try to play bigger. Whenever you try to get all of your losses back at once, you are most often doomed to fail. This is true in everything, in your investments, your trading, and gambling. I learned from the crap table at Las Vegas to keep only X number of dollars in my pocket and never have any credit. Because the worst thing you can do is to send good money after bad. If you can physically remove yourself from the premise, which is the same thing in the futures trading as getting flat, you can see things in a whole different perspective. After a devastating loss, I always play very small and try to get black ink, black ink. It's not how much money I make, but just getting my rhythm and my confidence back. I shrink my size totally to a fifth or a tenth of the positions that I trade normally, and it works. I think I ended up losing only $57,000 in November of 82 after taking a $600,000 hit on November 4th. Is there any trading mistake that you could isolate as responsible for the election? Oh, no. Sorry, I'm skipping that question. When you look back, do you say, what did I do? And Marty Schwartz says, I think because I had huge gains the month before, I've always had my biggest setbacks after my biggest victories. I was careless. Jack Schreier says, do you still make trading mistakes? By that, I mean deviations from trading principles that you consider valid, not just losing trades. He said, yes, you always make trading mistakes. I made one just recently, a terrible mistake. I was short the S&P and short the bonds, and I got nervous because the bonds moved above their moving average. However, the T-bills had not followed suit. One of my rules is to not have a position on when moving averages and T-bills and the bonds diverge. That is, when one is moving averages above the price and the other is below, because interest rates cannot move very far until one confirms the movement of the other. According to my rules, I should have moved my bond position from a short to flat, and instead I reversed from short to long. I paid dearly for that mistake. Whereas I had whereas I had lost only about 20,000 on my original short position, the next day I had a six-figure loss, my largest loss of that year, or of the year on that one. From time to time, you have alluded to your trading rules. Can you list them? Swagger says. So he says, I always check my charts and the moving averages prior to taking a position. Is the price above or below the moving average? That works better than any tool that I have. I try not to go against the moving averages. It is self-destructive. Has the stock held above its most recent low? When the market has penetrated its most recent low. If so, that stock is much healthier than the market. Those are the types of divergences I always look for. Before putting on a position, always ask, do I really want to have this position? After a successful period, take a day off as a reward. I have found it difficult to sustain excellent trading for more than 2 weeks at a time. I have had periods where I can be profitable for 12 days in a row, but eventually you just get battle fatigue. So after a strong run of profits, I try to play smaller rather than larger. My biggest losses have always followed my largest profits. The next rule is a major problem for me. I'm always trying not to break it. The rule: bottom fishing is one of the most expensive forms of gambling. It is okay to break the rule on occasion if you have sufficient justification. This brings me to my next rule. Before taking a position, always know the amount that you are willing to lose. Know your uncle point and honor it. I have a pain threshold, and if I reach that point, I must get out. When T-bonds and T-bills differ in respect to their individual relationship between price and moving average, one above the moving average and the other below, then have no position until one confirms the direction of the other. Generally speaking, a price above the moving average implies a price uptrend, while a reverse case implies a price downtrend. The last words I have at the bottom of the page are work, work, and more work. Swagger says, is there anything to add to that list? Marty Schwartz says, the most important thing is money management, money management, money management. Anybody who is successful will tell you the same thing. The one area that I am constantly trying to improve on is to let my gains run. I am not able to do that well. I am always working on it. To my dying day, I'll probably still be working on it. Swagger says, is that because you do something wrong? Schwartz says, I just love to take profits. I hear the music when the cash register rings. The irony is, how can I be willing to risk 400 points on the downside and only take 200 points of a 1,000-point move on the upside? On the risk side, nope, sorry. I think I did that one. Nope. Are there any other rules that you can think of? He said, yes. If you're ever very nervous about a position overnight, and especially over a weekend, and you're able to get out at a much better price than you thought, and you're able to get out a much better price than you thought possible when the market trades, you are usually better off staying with the position. When your worst fears are not realized, the probability you probably should increase your position. So let me repeat that. When your worst fears are not realized, you probably should increase your position. My philosophy has always been to try to be profitable every single month. He said, you start off every year with a clean slate, Swagger says. He said, yes, that's my philosophy. January 1st, I am poor. Do you trade smaller in January? Not necessarily. It is just that my attention is greater. He said, do you take your losses more quickly in January? Swagger asks. He said, no, I always take my losses quickly. That is probably the key to my success. You can always put the trade back on, but if you go flat, you see things differently. Greater clarity, Swagger says, much greater clarity, because the pressure you feel when you are in a position that is not working puts you in a catatonic state. Catatonic state. What do you tell people who seek your advice? I always try to encourage people that are thinking of going into this business for themselves. I tell them, think that you might become more successful than you ever dreamt, because that is what happened to me. What is the best advice that you can give the ordinary guy trying to become a better trader? He said, Learn to take losses. The most important thing in making money is not letting your losses get out of hand. Also, do not increase your position size until you have doubled or tripled your initial capital. Most people make the mistake of increasing their bets as soon as they start making money. That is a quick way to get wiped out. And then one of the summary things is he became successful when his desire to win took precedence over his desire to be right. All right. A little bit of everything is the part 3 of this chapter, or this book rather. And next time we'll start with James B. Rogers Jr., James Rogers, and we will get into that later. All right. So I wanted to jump into my notes here. Not a whole lot I have here, but we have the 1440-minute candle. We're on a 7-day extended run above the yellow line is my 5 SMA, daily 5 SMA. We got 1, 2, 3, 4, 5, 6, 7. And today, kind of a little bit roll here. We are still making a little uptrend here in the slow line. However, our 2-period rate of change on our daily basis has dramatically fallen off while we've made the 7-day move to the upside. Also wanted to go here. So we're still in the same kind of pattern above here on the daily. We have not broken down below here yet. I don't know why I keep trying to short while I see this same pattern here, but nevertheless I do. One of these days, hopefully I'll learn that lesson to stop shorting this when this pattern is going on. All right, so the 60-minute, nope, not that. Wanted to go over here on the come on, computer. 60-minute chart here. So you can see that I have a couple zones here marked off, with these yellow lines. One is this area down here around 62.40. That's what I had this morning, but we've moved back up into that. The other one is this area up here, 62.50, 53, 54 zone. So that's what I have here. See if we get this second reverse here. Lower end 60. That's 65,000 tick. So on the $65,000 tick, I've got this kind of upper and lower zone marked off here. And you see this lower end is down here around 62.23, 24. Pardon me. Kind of this upper end is somewhere up here around 62.61. So, little over 30-point range here that we're going to be conscious of. Currently, we are below that 55. I marked off this 55 only because on this last move up, that's where we met that initial resistance. We poked up above it, came back down, tried to poke up. So far, made lower highs, two lower high, or one. Actually, technically, we've not made a lower high because we've not taken out these lows. So it seems to be a little bit lower high, but we have not technically taken out these lowers here. And then I wanted to pull over the 60-minute gap chart or the .D chart and show here we've got, on the LBR 310, we've had these 1, 2, 3 pushes up. We've kind of broke outside the upper Keltner channel, outside the upper Keltner channel, outside the upper Keltner and Bollinger Band. Then we exceeded up, touched that upper Bollinger Band and the upper Keltner channel. Failed. Today we pushed up, but we made lower high so far. So again, I'm expecting a test back down into these lows here today, and then even potentially taking out those lows, as I mentioned in the group chat there. So we'll see what happens there. On the internals, again, going to go over this section here again on the VIX, which is this is back on 626. This is the 27th, and then this is Monday the 30th, and today the 1st, Tuesday the 1st. So as you can see in the VIX here, we're coming up in the VIX, which should bode bearish for the stocks. However, the SPY is continuing this climb here for now. We did make a little bit of a lower high and closed down a little bit off of today's price action here. So we want to keep an eye on that. I believe that's all I have for today, guys. But like I said, I got those couple of zones I'd like to keep an eye on. Um, and that is the let's go back over here. Right now, looks like we're right here around 49. So this 5375 zone, I think is what I had. So the 5375, if we're back above that, or if we move back below this 38 to 40 zone that I had this morning, that then we could see a little bit further downside or further upside. Like I said, I wouldn't be, back on the daily chart here. Let me pull that back up. Um, so over here on the daily, if we were to take out those highs, if we were to take out these highs here today, kind of push up a little bit higher on this divergences here, I wouldn't be totally upset on that either. To see it spike a little bit higher, come up in here, and then move back down. Or I mean, obviously, I want to be open to the fact that we could see additional strength. And once we hit the top of this, we could see just a run to the upside up in the 63. I think one of the things I had was 63.40 or something like that. I don't know what it was. But something I was calculating had a projection up in there. So, all right, guys, we will talk again tomorrow. Stay safe, trade safe, and we'll have fun tomorrow.